Okay, we are live. Hello all and welcome to Vega Testnet Jam. It's a weekly event every Thursday at 6 p.m. UK time. Here today we have Tamlin with us, and she'll be going through she'll be going through market creation on the Vega testnet and giving a bit of education and just going through some commonly asked questions. This is the educational portion of the event. And then in about 20 minutes or so, we will open it up to the rest of the floor. I'll take questions at the end, and then we will move over to the Zoom room. And that Zoom link will be posted in the Twitch chat for all of you to see. And then if you're so willing, come and join us in Zoom, where we'll be chatting about testnet, going through any questions you might have, and answering other general questions. So without further ado, I will hand over to Tamlin. And yeah, let's get started. Welcome.
Thank you. Thanks. And hi, everyone. Thanks for joining tonight. So yeah, I'm really looking forward to taking you guys through basically the Vega derivatives toolbox, which is a way that we can showcase the power behind Vega for permissionless creation and proposals of markets on the Vega testnet. So many of you would be familiar with the permissionless spot market protocols like Uniswap or Balancer, and Vega just extends this functionality and basically takes a proof of stake blockchain, which our current testnet is running on Tendermint, and combines it with a blockchain native trading application that does a lot of the heavy lifting behind basically the creating and running of derivatives markets. So this toolbox is comprised of things like built-in products, so you don't need to write smart contract code, bridges. So our first bridge is to the Ethereum to the Ethereum network, and we're currently bridged to Ropsten, as we'll see today. There's also a data sourcing framework, which allows you to be really creative about the kinds of markets that you will create and settle, and then a whole bunch of really sophisticated risk and margining tools as well. So today what we've done is we've actually launched a GitHub repo to help with proposing markets, because all market proposals on Vega need to go through on-chain governance. And so when you're proposing a market, you need to engage with governance community and with the trading community to have your proposal pass a vote. So today I'm going to demonstrate that in a hands-on fashion. So I'm going to share my screen and first of all introduce the host of disabled participant screen sharing. Dagan, do you mind just enabling that? Oh, I think I'm the host now. Cool. Brilliant. Okay, great. So this GitHub repo, github.com, Vega Protocol, Market Proposals, is an open source repo. You're seeing it very early in its most basic form. We've set this up to be a bit of a guide for best practices for the community to start designing and proposing new markets. So I'm going to walk you through what we've done today, but I really want to make it clear that this is something that we want to co-create with the community. And even as we've been pulling together some tools and some guides for creating market proposals, there seems to be an infinite amount of things that we could build and do to help with that kind of market proposal user experience, let's say. So we'd love to have anyone who's interested involved and contribute to the evolution of this repo as well. So I've just got it up at the moment, and you can see the README. We talk about steps for proposing a market. And that's what I'm going to walk through today. So the first step for proposing a market is to write up a market proposal. And we suggest that you do that in the market proposal section of our community forums. And the idea behind this is to explain some context behind the market, why you think that market should be created on Vega, surface some high-level definition of the market. It doesn't have to be fully complete, but this is a place to converse with the community. And then once you've done that, and I will do that myself with you shortly, then back in this repo, we've set up a sort of proposal template for you to walk through all the steps needed to think and all the things you want to think through when actually designing this market. So thinking about how you set the parameters, what a whole bunch of decisions that you are making as the market proposer. And we show how to set this out, and then we suggest that you raise a pull request in this repo, and then you can share that link back on your market proposal on the forum. And then that allows the governance community who are going to be reviewing your market proposal, deciding if they think they should vote on it. It allows them to discuss that with you either in the forum or on your PR in the Git repo. So let's do step one. So let's go over to the community forums. I started a draft earlier today to show you, and I'm thinking I would really love to create some Japanese US dollar monthly futures on the testnet. So the context is I'm actually going to just hit create on this and we can have a look. So I've hit create on this and hopefully everyone can read it. I'll just zoom in a little bit. So yes, I love Japan. I studied Japanese at school. I think it's a remarkable place, and it's been on my mind lately. I'm really missing not being able to do any skiing or snowboarding at the moment. And as the world opens up again, I'm really quite keen to head back to Japan. And our community manager, Christina, recently acquired a new little addition to her family, and this again brought home to me how much I'd really like to get to Japan, maybe find a little puppy of my own like this. So I mean, this is a slightly tongue-in-cheek, slightly casual way of introducing a market, but in reality, what you want to do here is explain the market and why and who might use this kind of market. So obviously, Japanese yen to US dollar market is a very major FX market, so it makes complete sense that there is going to likely be some demand for such a market and might interest some traders in terms of managing a portfolio of yen. So you could potentially make an argument that this is a good market to have, particularly because on Vega the building products at the moment are cash settled futures rather than deliverable futures. This helps certain trading strategies. It just means you don't have to go through the palaver and the expense of the actual settlement, the physical settlement, and so I'm putting it out there, but I think that there would be a market for this. In fact, the CME back in 2019 has been experimenting and launching some cash settled forward markets themselves, the FX. And I thought having a DAI settled market for a traditional FX pair was pretty cool as well. So this is all to showcase on our testnet. So just some really quick info about the market as I would see it. I would think that this could form part of a series of monthly futures. For this proposal, I'm just proposing that we do one, and that is for expiry in June 2021, so June this year, and we can roll out more if there's more appetite. Something I need to think about when thinking about a future is what is the data source? How is it going to settle? What is the Oracle price at settlement? And because essentially that's what you're trading as a trader of futures and derivatives when they're cash settled. And I actually have said in my proposal, I don't know yet. I haven't decided on the data source for settlement. I'd be really interested in looking to the community and getting a conversation going on, what the sort of best and most trusted data sources would be. As I said before, I think it would be cool if we settled this in DAI, and on the testnet, it's actually testnet DAI. And yeah, once we get getting into the details of setting the proposal, we'll be doing things like choosing risk parameters, which will then basically have an implication on the maximum amount of leverage that this kind of market could support. So what I'll do is I've created this forum post for discussion. I'm going to go back to the Git repo, and we're going to work through essentially creating a proposal in the Git repo. And then I'll probably, after I've used the tools there to figure some of this out, especially the maximum leverage, I can come back and update this forum post or thread in the conversation. Right, so if we go back to the Git repo, I've just shown you the README, but in terms of the structure of the repo, the proposals is where I'll just click into it actually. The proposals is where we have a template which shows, and it's just in a Python notebook, which just shows how you should or could walk through and set all of these parameters needed for the market proposal data blob that you're basically submitting as a transaction to the network. And I've also created this proposal guide because that can help walk through and talk about why you should set some things one way or other things another way. We also have really amazing documentation. So I've linked to the docs in the README as well. So we'll be spending some time in this proposals folder, but in addition to this and to support the proposals, we've also got a folder of risk tools, and that is to help with doing things like calculating some volatilities, looking at what the margins might look like under your different parameter settings, looking at what the risk factors and leverage are as well. And we'll introduce you to a couple of those tools. We've got to put some data tools in here. These are just tools to help download external data, especially if you're wanting to get some historical data to help you with your proposal. And quite importantly is products. Now, Vega, the first testnet implementation has cash settled futures, and they're direct futures, not inverse futures, as its first product. And so just to help clarify that for people creating futures, we've created a markdown file that specifies what the futures is. So it talks about how the valuation of that futures market, and then how market settlement is done, and how the final settlement at expiry is also calculated. That's just helpful for you to understand what you can launch reasonably in terms of cash settled futures on Vega. So now I'm going to go over to, I've actually got a Visual Studio Code set up. And I've got in this proposal template, cash settled futures. So what we would like to do is make a copy of this and make it be our Japanese yen US dollar futures proposal. And then I will rename it to be, Tamlin's proposal, Japanese yen US dollar futures. I'm just going to walk through the file now, and we can do that later. So I will just get rid of this for now. So this is the proposal template. So one of the important parts of a proposal is the market description and the metadata. Now, the market description doesn't actually go into the proposal blob itself, but it is important for making sure that the community understand your intent, so that they can understand whether what you are proposing in terms of all the parameters make sense, that your proposal is going to deliver on your intent. And then actually setting the metadata is about, adding some tags that help make sense. And we also wrapped into this some naming as well. So you can use some fields on the proposal to set the name of the market, and actually add a bit more of a sort of trading-y type ticker code to the market as well. And this is all about discoverability. So it's really, really important that everything that's represented here is sufficient for somebody, either if you're a governance community member, maybe you want to check that, look, does the Oracle, does the data source definition match up to what they've stated as their intent is here? And also as a trader, obviously, you want to know what is the thing I would actually be trading. So you'd scrutinize this, and you'd also look at the data source definition itself, which we'll get to in a bit. So that's the market description and metadata. So I would see this Python notebook. This is, as I said, this is just an example, but you can double click into this. These are just markdown cells, and you can change these. So say I decided, I wanted to make clear that this is a monthly futures, June. Maybe I want to be clear that it's a 30 June expiry. This is just letting anyone who's reviewing this really understand what the market is. Cool. So I've said that I've just added some metadata tags here. You can actually add whatever you want. So maybe I want to add a 2021. Sorry, I'll just go like, actually I could just add 2021 if I wanted, or I could add another tag that was like, hey, Tamlin markets, or actually have that proposed by Tamlin. And we're really hoping that over time the community will develop some really good norms for this, because this is about how it these tags are going to be used by things like the front end, the console, and other applications for discoverability. So then moving on to one of the next things we want to think about is the settlement asset. So on Vega, the settlement assets are, as I said before, we've got a bridge to Ethereum. And so what that means is anybody can have proposed an asset already to exist on Vega. That is one of the bridge assets. So it's like any ERC20 on Ethereum can be used for settlement on Vega markets. So I have chosen the test DAI token as the token that I would like the market to settle in. I'm just going to open, I've got a proposal guide here that helps walk through some of this. And you can see when it gets to assets, if you want to go and have a look at all of the assets actually on the Vega testnet, you can just follow this link. Let me do that now. And it will pull up a list of all the assets. And so we've got the test euro, we've got the vote token, which we'll be using later to vote on the market. We've got this, a few other interesting test assets, but we've got this here, which is this test DAI asset. And so actually, if any of you have been playing around on the testnet, you know that you can go and get some test DAI by running the faucet on Robston and getting some. So if you want to play around on the market we create, please go do that in the background. So going back to, where was I? Wrong window open. Going back to the proposal guide, yeah, so you can have a look at all the assets, choose an asset. If there's an asset that you want the market to settle on that doesn't exist yet on Vega, you then need to go and propose that asset to exist on the bridge, basically, so that the bridge knows to allow markets to use that asset. So if there was a wrapped BTC or something that you wanted to use, that you can do that. That's a separate governance action, and we'll take you through that in a separate Testnet Jam at some point. Now, next thing to think about, we go back to our proposal. So I've told you all what settlement asset we're going to use, and it makes sense to use a stable coin because you don't, I mean, it really depends on the market, but it does, I think, make a lot of sense, especially for derivatives markets to use stablecoins as settlement, because you don't have to wear the variability then of the risk around the value of your settlement. So then we need to choose the default trading mode. So on Vega at the moment, the testnet is implemented to offer continuous trading, which is using central limit order book price determination method. And over time, we'll be building out those price determination methods. For example, a discrete trading method is like a frequent batch auction. Or, down the track, there's been talk of maybe some sort of combined AMM style and limit order book price determination method. So there's lots to explore in Vega, but at the moment, when you are creating a proposal, you'll just be setting continuous trading. So you want to let the community know that. You want to let them know what the tick size will be. And in fact, the tick size, I'm just going to edit this, because actually the tick size is one increment of whatever the number of decimal places that you set of the asset on the market. So I'll show you that when we set the proposal below. Great, and we're going to be quoting in test DAI. So then this is where it gets really fun. We need to set the risk model and parameters. Now, this is super important when you're doing a proposal, a market proposal, because this is where, this is how basically the risk model the risk model determines the sort of particular methodology around how margins are calculated for your market, and the parameters help determine essentially how much margin is needed. And David Sisko did a really good Deconstructing Vega YouTube on that, which we will link, and I really recommend watching. And it really helps unpick and explain what's going on here. So the risk model that is on offer at the moment is a log normal risk model. Again, like the price determination methods, there will be a suite of risk models built out over time. So we are going to have a think about how to set these parameters. Now, the two parameters that really matter the most are your tau and your volatility. And again, if you watch David's presentation, you'll understand that the tau is talking about looking at forward how essentially long before we next sort of reevaluate the risk of the portfolio that you're holding. And then the volatility is about how volatile is this underlying asset, and that has a huge impact on the potential margins and leverage. So I think using a 1 hour tau is a good amount. By way of comparison, typically like in traditional exchanges like the CME and so forth, they typically reevaluate margins in multiple hours, sometimes just daily. So 1 hour is a nice sort of much more regular way of measuring the margin. And then the volatility, we want to set this to something that is reasonable based off, basically what it's meant to do, the volatility, is estimate what the real volatility is going to be between now and the expiry of your market. Now, of course, no one knows that because that's what still is yet to unfold. But there are different ways that you can estimate that. And so I've written up a little bit of a guide here for that. I think actually if I share this a little bit, no, that makes it a bit nicer to read. Okay, cool. So as I said here, the parameters of the big effect on margins are your tau and your volatility. Now, here are some methods for deciding the volatility parameters. So you can use historical data, and that's if you have access to historical spot data for your markets, you can take that data and you can basically look at the standard deviation of the log returns, and you can derive a volatility from that. But there's questions that you need to answer for yourself if you're a quant or a market creator, and that's like, how much historical data is needed? Is the quality of that data good enough? Is it frequent enough, etc.? Do you want to assume that if a market was less volatile and has more recently become more volatile, that's a better indication of what you think is going to happen over the future? And all sorts of questions like that quants in investment banks and on trading desks spend a lot of time thinking about. A really great way of choosing your forward-looking volatility is to actually use a market value for that forward-looking volatility, which is if there's a liquid options market for your underlying, then actually that provides you through the implied volatility of a market view of your forward vol. And then you're going to have cases when like neither historical spot data or this implied vol exists. And in that case, you want to think about how you can make a best guess. I think you want to keep it fairly conservative, because basically if you underestimate your volatility, what you're doing is you're not charging enough margin on the market, and that means traders are going to get wrecked more. They're going to the market's going to end up in auction mode all the time, because the market is needing to protect itself from potentially having low liquidity or your sort of crazy price moves. So you really want to try and figure out as conservative a volatility estimate as you can, while still allowing good capital efficiency. So you may want to do something like, say, a new token is being launched and you're proposing a futures market on that token. You may want to look at like how other token launches, what their volatility was, or maybe you want to look at similar asset classes, particularly if, say, you're doing something like data breach options or data breach futures, or something like maybe something around battery power that just hasn't existed before, you could go and look at similar markets in that domain. So yeah, so that's how to think about volatility. And actually for this market, what we're actually going to do, we go back here to the to thinking about the risk. This is actually wrong. I'm not going to use 80%. I'm still deciding what it should be. And something that I found that would help me is I wanted to use this implied volatility curve. And so I looked at the CME, which does have Japanese US dollar options. And if you have a look at this, and I can send a link to get to this chart as well for you, I'll add it to this Python notebook actually. But what you can see here is the orange line is basically the settlement, the most recent settlement prices for a whole bunch of markets, option markets that expire at different months. So you can see here the market that expires in June had a volatility or an implied volatility of around 6.5%. And in fact, this gray line, I think, is just looking at, we'll look at, instead of a snapshot, looking at a 7-day. So you can see that things have become more volatile in the last 7 days. And so I'm actually going to use this because ours is a June expiry. I'm actually going to use this data and I'm going to set the volatility to 6.5%. Thing is, my hunch is 6.5% is really quite low. And given that, you know, the log normal risk model isn't you know, as David said, it's not a perfect risk model, and we're definitely looking at building out a suite of risk models soon. So you're better off to probably increase the volatility rather than decrease it. So I'm actually going to set this to 10%. So we're going to make that 0.1. Great. So in terms of these other parameters, the risk-free rate and mu can be set to 0. These, since it's a futures market, and the risk aversion lambda is just talking about like how unlikely the move needs to be considered extreme. So I want to know what the resulting risk factors on this market will be with these levels that I've set. So I'm going to open another tool, which is also in the risk folder. It's called this risk factors BS Python notebook. And hopefully you can see all of this in the folder. So I am going to, if you go up here, this is just using some tooling, some Python tooling. I'm going to run this cell, and then I'm going to go here and I'm going to actually just come down to these lines and put in the numbers that I've just decided on. And actually I'd already decided on 10%. We have a tau of an hour here, which needs to be annualized. And the lambda, sort of 1 in 10,000, I think we said, didn't we? So if I run this cell, yeah, here we go. This is actually giving the leverage that is the maximum leverage that this market could sustain based on what I've just inputted. Now, you can see that this is pretty high leverage. You're looking at over sort of 200x. I may not be comfortable with that. As a market proposer, I may decide to up the sigma or even up the tau to sort of lower that leverage. And this is the kind of debate that we hope that the community will really get involved with as we all learn together what makes really good, safe and well-functioning but capital-efficient markets. So I am going to leave it at this for now. And we're going to go back, and we've set our risk model and parameters now. And we need to think about our data source for settlement. And this is obviously really important because it's about, you know, how the market actually settles, and it determines who the winners and losers are at expiry. So what we really want, you know, what data source will give good quality data? We're wanting to settle this market basically at midnight on 30th of June. That doesn't necessarily fit into the schedules of the traditional market opening hours. A lot of FX sort of spot markets are traded OTC on investment bank desks. Some of that data is surfaced, but I haven't figured out yet exactly where to get the best data for this market is. And a question you probably want to ask yourself, do you have sufficient reputation to act as a second data source yourself? Because if you're well known in the community and people trust you, then maybe you can be the one to submit and say, look, I'm going to use this Bloomberg reading, but basically it's going to come down to my judgment or whatever. So this is still TBD. It's okay for it to be TBD today because actually we don't have yet the data sourcing framework built in and implemented on the testnet. And we will run some sort of deeper dive sessions on this as we do roll those features out. Then for price monitoring, I'm going to skip over this for now. I've decided not to override the default price monitoring parameters. They just look back. This is just to decide whether a market should be put into a price monitoring auction. It's a protective auction. It's just trying to protect the market if the market moves really suddenly in one or the other direction, because you want to know that any sudden extreme price moves are real, that they're not just a sort of consequences of the market microstructure, like people are bullying the market up or down, someone, big whales come in and is bullying the market. So this helps guide basically when your market will get put into a price monitoring protection auction. And then we've got to think about some governance parameters. These governance parameters simply represent how long your market proposal stays open. So the network has minimum set. On the testnet, just so that we can have a bit of fun, those minimums are set to be quite low. I think there might be like 2 minutes that you need to leave a proposal open for. Of course, in real life, sort of as the testnet matures and there's more going on, the governance community would want longer than 2 minutes to figure out if markets should be voted for or against. And then the enactment date time just simply refers to when that market, so what happens is if it passes a vote, the market then goes into an opening auction. The enactment date time is simply about when that market will leave the opening auction and go into that default trading mode. As I said earlier, that will be the continuous limit order book for now. Great, so we've now communicated everything that we're pretty much thinking here. I may have missed a couple of things out, but this is basically the gist of your proposal. Now in this cell down here, and this is one of those tools that if anyone in the community is good with Python and would like to help out, we can sort of auto-generate this from things you've filled up above here. But this is us just preparing that data blob, which is a market proposal, to then be used to actually create a proposal. So I did this a little bit earlier. So this is my party ID. Now the proposal terms, as we talked about, are like, here are those governance proposal numbers. Now I'm just going to, this is in UTC time, so we need to set this to, because it's 1835 here, so let's set this to be actually, sorry, because I'm British summertime, I'm going to set this to be 6:40, and I'm going to set this to be to then enact if it passes the proposal, let's say 3 minutes later. We're going to have quite a large number of decimal places on this market because actually the yen to dollar, I think, pretty easily chumps up 5. So let's extend it a little bit and do 6. These are those parameters that we talked about earlier. Let's just double check that they line up. We've got a sigma of 0.1 is what we wanted. The continuous trading, the tick size that we talked about earlier, I said is 1. That's just one of the 0.000. One of the sixth decimal place numbers. So the tick size will actually be 0.00001 of a die. The instrument, now we want to give some nice names for this. So I think we came up with something earlier, didn't we? So let's take this code here. For anyone who's interested, this code is just based off a sort of traditional way of naming different monthly futures. But again, that's all up for the community to experiment with and see what makes sense. And we have this quite descriptive name here as well. And I'm going to pop that down here where it says name. Okay, so we're just filling out this blob. I've got some metadata here. I've said it's an asset class FX. I think I popped some more metadata up here, didn't I? So we might want to copy some of this down as well. I probably won't do them all just because we're running over, and I'd really like to be able to hop on a chat with anyone who's interested. So why don't I I'll just pop a monthly one in as well. Good. Okay. So anything else we need to think about here? We've got the risk parameters, we've got the continuous trading, we've got our code now. We've got our settlement asset. This ID should match up with, what did we do up here? We grabbed the TDI settlement asset, and this needs to be the Vega ID of that settlement asset, not the Ethereum contract address. It's just letting Vega know which of the sort of pointers it needs. We have a quote name of TDI. We're going to have a maturity of 30th of June basically at midnight. We're going to come back to, as I said before, all of the data sourcing stuff. At the moment, this is simply some draft text that isn't used yet until we implement the data sourcing framework and the settlement at expiry. But the kind of thing that you would have here would be some sort of data. It wouldn't be snowfall. This would be like a JPY US dollar market, and it would be matching on whatever the sort of last price is or something like that. We'll have to come back to this, sorry. It's not something I'm super familiar with yet, as it hasn't been implemented. All right, so I have saved all of this. I'm going to grab this blob and I'm going to show you what's really cool here. Sorry. So what we can do is we can just copy all of this. Sorry. And we are going to now go over to our testnet. So for those who are following along, you can go to testnet.vega.xyz. I'm already logged in here. I have some collateral. I actually happen to have lots of vote tokens. And what we're going to do, these are the list of the market proposals that are currently on the testnet. You can see there's one open, some that have been rejected and declined. We're going to actually create a new proposal. So what we do is we just click search here and we click propose. And then all we have to do is paste that blob of our market definition in here. And if we keep our fingers crossed and hopefully this all works, I'm going to click submit. And you should be able to see this pop up as a proposal. And there was an issue with my proposal. Let me have a look. Does anybody know what's going on here? It may be that I've just taken too long in my chatting, and so we need to make the closing date time a little longer. We need to, let's make that 50. What else could be going wrong here? The maturity obviously needs to be in the future. I think that's probably what it was. So let's try clicking submit that. Okay, and then to just in case there was just something wrong with the data there, I'm going to do this again. So let's go propose. Nope. Okay. Curse of the demo. I'm not quite sure what's going on here. What I am going to do is just try popping this a little bit longer into the future, just in case that's our problem. It is the 8th of April today. Yes. Cool. And then it may be, because I haven't really practiced with the metadata, it may be that there's a problem here. So I'm just going to delete these as well. Let's see if that works. It does not. Brilliant. Well, this is meant to show a proposal and I'm going to have to troubleshoot this. So what I'm going to suggest is that we hop off this live demo because it's not quite working, and we will hop onto a Zoom where others can troubleshoot. What I might do is update this YouTube once we do get it working, and then you guys can see the proposal actually being created. What will happen is it will pop up here as a new proposal and it will be open, and you can see there's a market that's been created earlier, and then anyone can click on that and they can vote for or against. I'm actually going to vote for this market since I have a bunch of the vote tokens, and that's how the governance on-chain governance process occurs. If this the deadline for votes for this market is in a few days' time. If by the end of that deadline enough people have voted and enough votes have been approved, then it will have been for yes, then it will open up into being a proposed market in auction, and you'll see it listed in this futures. I'll have a little hammer next to it, and then it will be in the opening auction. And then actually, by the looks of it, it will be in the opening auction for 15 minutes. And then that will give 15 minutes for people to sort of submit some opening auction bids, and then it will go into the continuous trading. So sorry I couldn't get the proposal to work. I probably can if I go and use the sample API scripts repo, which is brilliant, but I'm very aware we've gone quite over time. So I'm going to probably just end here, take any questions, and then hop onto the Zoom. Over to you, Dagan.
Thank you, Jamlin. That was great. Really, really insightful. I actually had some questions, but for time's sake, I will put it out to the audience. Does anyone on Twitch have any questions? None came up during your talk, but we'll give it a minute or so. And if not, then we will get started with part 2 on the Zoom. No questions from the team. I'll ask you my question later. But yeah, I guess, yeah, let's get started on the Zoom. I'm going to post a link in the Twitch chat. I'm also going to post it on Discord, and we will join you in the next room. But that is it for this Twitch stream. Thank you all for attending.
Thanks,
and see you on Zoom.
Bye.
Bye, guys.